The wrong property manager can cost you thousands in lost rent, expensive repairs, and legal headaches. Even with all that, most landlords still hire based on unbacked promises instead of performance. Here's how to find a manager who will actually protect your investment. Experience and local market knowledge. Look for managers with significant experience in your specific area and property type. Someone who's only managing condos downtown doesn't necessarily understand single-family homes in a suburban neighborhood. Ask how long a manager's been managing properties locally and request references from long-term clients. High client retention rates indicate consistent service and satisfied property owners. Verify their licensing and professional certifications. In California, property managers need a real estate license, and ongoing education shows commitment to professional standards. The tenant screening and placement process. Strong tenant screening is everything. Ask about their application requirements, credit score minimums, income verification process, and background check procedures. Find out a manager's average vacancy rates and time to re-rent properties. You obviously want both of these to be very low. On the flip side, if they have an attractively low average time to re-rent, but with lots of tenant turnover, this could indicate bad tenant screening procedures. Good managers maintain waiting lists of qualified tenants and market properties effectively to minimize vacancy periods. Understand a manager's lease enforcement procedures. How do they handle late payments, lease violations, and problem tenants? You want someone who protects your interests while following legal requirements. Maintenance and emergency response. Ask what maintenance issues they handle without approval and what requires owner consent. Clear approval limits prevent surprise expenses while ensuring urgent repairs get handled promptly. Verify their contractor network and emergency response procedures. Do they have licensed professionals for all trades? How quickly do they respond to urgent issues like water leaks or security problems? Understand their maintenance markup policies. Some managers charge significantly more than actual contractor cost. Transparent pricing protects your bottom line. Financial reporting and communication. Monthly financial statements should show all income, expenses, and supporting documentation. You should understand exactly where every dollar goes and how your property is performing. Ask about their communication style and response times. How quickly do they return calls? How do they handle owner questions and concerns? Good communication prevents small issues from becoming big problems. Verify their insurance coverage and bonding. Property managers handle your money and have access to your property. Proper insurance and bonding protect you from theft or negligence. Fee structure and contract terms. Understand all fees, not just the management percentage. Ask about leasing fees, maintenance markups, inspection charges, and any other costs. Hidden fees can significantly impact your returns. Review contract terms carefully, especially termination clauses. Some managers require long-term commitments or charge substantial cancellation fees. Others offer month-to-month flexibility. Compare total costs, not just management fees. A manager charging 8%, for example, with no markups might cost less than one charging 6% with significant additional fees. Property management is about protecting your investment while removing the day-to-day headaches of being a landlord. The right manager should answer these questions confidently with specific examples and verifiable results. Choose based on performance and systems, not just personality or the lowest fee. Your rental income depends on the expertise and professionalism of your property manager. So call us today for the ultimate in both.